President Trump says the markets are going to boom. Well, that's one word to describe what happened on Wall Street today. He also said his tariff rollout that happened yesterday is going, quote, well. That upbeat assessment comes less than 24 hours after the president, let us say, upended just about 100 years of understood global commerce. Today, Wall Street experienced the worst day since 2020. The post-election boom that the president, when he was president-elect, pointed to, well, that's been erased. Stock prices down, and Americans with portfolios, either for their retirement or for now, are facing genuine losses and the unhappy reality that they may be financially worse off than they were before Election Day. Tariffs, of course, are trade taxes, and the wide-reaching effect of them sent shockwaves across the world. Stock markets in Beijing and Tokyo sank to multi-month lows. Foreign leaders lined up to condemn President Trump's actions, promising countermeasures of their own. J.P. Morgan, for what it's worth, warns the president's tariffs could push the United States and quite possibly the rest of the global economy into recession. Despite all of this uncertainty, the president's Commerce Secretary, Howard Lutnick, sounded positive.
When the biggest economy in the world says, I don't like the way you're treating us, how about a little respect? Let the deal maker make his deals. Let the best negotiator and the best person who cares about America, let him make the deals.
Okay, so let's discuss that real quick. So you got two sides of the coin here. You have the business owners, CEOs, economists, leaders in different countries that really don't like what the president did last week, right? So many people totally disagree, right? And the stock market then crashed, or the stock market had a correction that we haven't seen since the 2020 pandemic. We haven't seen the stock market crash on a 2-day period like we did in 2020. And most people believe that it was we self-inflicted on ourselves based on what Donald Trump did on April the 2nd. So when you talk about wealth and the stock markets, as well as 401ks and things like that, these are people's money on a daily basis that's being moved up or down. And on average, we know, again, factually stated, on average, the stock market goes up 8 to 10%, if not 8 to 12% on average over the last 50 years. So there's a lot of wealthy individuals that ultimately put their money in the market to then accumulate that 8 to 10 to 12% annually, because we know that is, especially in the United States, it's almost a certainty that the stock market will go up each year based on the economy, how strong, we are when it comes to buying and selling things, and just the amount of money that circulates throughout the United States economy on a yearly basis, right? But what happened last week was the president put a whole like a straight knife into it, and the market dropped significantly. It's a lot of people that got money that's not happy, right? And then you have the other side of the coin, where the optimistic person would say, well, this is a negotiation tactic. We got to allow the president to do his job when it comes to creating a fair trade, a world of fair trade, and not allowing other countries to take advantage of us that like they've had over the last 50 or so years. And we are in a situation where the president is trying to basically repair that. There's many people that don't agree with it, because they feel as though what's not broken, don't fix it. There's no point in doing it, because we still good, regardless of if a country is taking advantage of us, like China or other countries like that. It doesn't matter. We're strong. It don't matter. We're going to just keep doing what we've been doing for the last 50 years. But Trump's coming in and saying, no, we don't. We're not doing that no more. And we're going to make an adjustment, and we're going to tear this thing down. We're going to burn the house down, and then we're going to build it back up.
Jang joins me from Doral, Florida. Caitlin Huey-Burns is on Capitol Hill, but I want to start tonight with our Money Watch correspondent, 𝐥𝐢𝐤𝐤 in New York. Kelly, as you know, there is a wag or two on Wall Street. Not many, but there are a few. And I heard one today say, well, if yesterday was Liberation Day, today was Liquidation Day. Lots of people selling off on the market.
Yeah, maybe not the best branding that you want to have if you're in the market right now. But yeah, look, you hit on it. I mean, this was the worst day, a single day for all of the major indexes since 2020. And what was that, right? That was COVID. So investors were looking at the potential impacts of tariffs, and they felt somewhat similarly to what was happening during COVID. I want to zero in on the S&P 500. So it lost, as you see there on the screen, nearly 5%. But in terms of value, it was nearly $2 trillion. Half of that came from those 7 big tech stocks we've talked about before. Magnificent 7, NVIDIA, Meta, Apple, etc. I highlight the S&P 500 because tech drives so much of it. And that is why if you're looking at your 401k today, it's not looking great, because a lot of our 401ks are invested in funds that track the S&P 500. So a lot of investors said, look, tech is reliant on production in China, and that translated into losses for your 401k today.
And Kelly, what is the sense of prices as Americans try to process this, whether it's for items like furniture or items like clothing or things that they get at the grocery store?
Well, a lot of things are going to go up. I mean, look around in terms of what you're wearing, what's in your home. Most of what we buy is made elsewhere. And so in terms of what you're going to see in terms of price increases, electronics, TVs, phones, food at the grocery store, maybe not as much if Canada and Mexico had been a part of yesterday's reciprocal tariffs, but we do get produce from South America and food items from other countries across the ocean. In terms of how long, it's really going to depend on the industry. A lot of companies stocked up ahead of time, but for those perishable things and things are coming across the border, you're going to see an immediate increase.
𝐥𝐢𝐤𝐤, always a pleasure. Thanks so very much. 𝐥𝐢𝐤 Zhang joins me now from Doral, Florida. And 𝐥𝐢𝐤, as you know, the president landed there recently, and he made some news on the plane, as he frequently does, engaging with reporters. And a couple of quotes jumped out at me. The operation is over, the president said. Let it settle in. But then he also said, tariffs give us great power to negotiate. Now they, meaning trading partners, to be affected by these tariffs, will do anything for us. So if the operation is over, are we still negotiating?
So we have two different thoughts right now. We have one thought is the president is using tariffs to negotiate with other countries. That's the one thought. And that is what most people are hoping, right? We hope that the president is using tariffs to negotiate with other countries to lower their tariffs down so that we can positively then lower ours and create a more fair trade agreement amongst countries. The other side of it is there's a possibility that this is not a negotiation tool. And the president is using tariffs to bring billions and billions of dollars within the United States when it comes to business around the world to then help our debt ceiling and our national debt crisis that we have right now when it comes to the United States, right? And then on the other side, lowering taxes to help the United States American citizen, while bringing money in when it comes to these tariffs. So the problem with the second point of just keeping tariffs on, that it then it affects business at a high level, which then affects the stock market at a high level. And a lot of people don't really appreciate the fact that their money is going down when they feel as though it's not needed. So do I believe that the president, as a businessman, is using tariffs to negotiate with other countries? Absolutely. I do. I absolutely believe that. Venezuela already came back. I'm sorry, not Venezuela. Vietnam already came back and said that they will agree to bring their tariff number down to 0 if the United States agrees to then lower the tariff that was just placed on the country just a few days ago. Right. So we have the deal making that has been started between countries that cannot sustain themselves with tariffs over 20 to 30 to 40%. Right. The president knew that there are, economies around the world in these countries that just can't sustain themselves because they don't have the power and the backing of what the United States has when it comes to how to be sustainable when it comes to tariffs. So I do believe that he will use it as a negotiating tool. The other side of the coin is, does he take it fully off? I don't think so either. Right. He said universal tariffs of 10% around the world. So that is not going to change according to him. Now, again, will he adjust that? Who knows? But for right now, what we see currently is we got universal tariffs across the board at 10%. We got additional tariffs upon other countries like China, and other countries that we do, business with, and we feel like they've taken advantage of us. And, this is our new normal, right? So inflation will go up, right? The prices of goods will go up. The prices of, autos, buying a car will go up. And it's important to understand these things so that we can prepare for what's to come.